Good morning, Daniel. Good morning, Mike. How's everyone doing? Welcome to our live stream. Welcome to TradeGateHub.com. I want to start off with copper, otherwise known as Dr. Copper. I've been talking about this for the last several weeks, ever since we rallied up to 460, which to me could have been a right shoulder. We're taking out the neckline here today. As long as we stay under this neckline, there is pretty good downside. The way you would measure the formation is you take this low right here, which was about 384, and just call it a buck. And the breakdown from 420 would take it all the way down towards 320 if we fulfilled the formation, as long as we're not breaking down. So, sometimes head and shoulders tops abort, but this is pretty clean with an ascending neckline and breakdown today. And what does that say? While copper was going up, the economy, the reopening trade, the recovery was definitely on track globally. Also, you have to take into consideration China when you're talking about copper and most other commodity markets. And this is a sign that not that inflation or the commodity bull market is over, but that we're in a period of a pause in commodity prices going up. I think that prices could break pretty hard. In fact, talked about oil, and oil's still trying to hold. It's holding barely. I talked about where you could have a long and then a reverse stop under 65.5. So the long would still be working with your reverse out stop under 65.41. Okay, let's get to the dollar. So the dollar, I was talking about us being able to take out this double top, which maybe is a little clearer on the daily. It looks like it's going to happen today. That comes in at 92.19. So far, our high today has been 17. So I think there's a shot for about 93.50. And with that happening, I think you could see the euro drop possibly towards this 1650, 1640 level. I'll be looking for divergences on some of the shorter term indicators. We're really not getting it yet. We have a little divergence between this high low and this low, but I'd like to see it a little cleaner. 15-minute is beginning to diverge, so I still think that I'm going to have a chance to get long under 117. So an important part of this business is having patience and waiting for your spots. We talked about the shorts early in the week. In fact, it was Monday when we were trading in here. To me, this looked just corrective, and that 1750 was important last week to get long. And then after seeing it was only rallying back to resistance, I felt that 1750 could be taken out and we get one more low. Part of that was a double top where people got all bared up here from the consumer confidence number last Friday. And then we had a weak retail sales number, and yet the dollar keeps going, which with getting pretty soft news, dollar is still acting okay. EG, and I talked about this, it's still well above the lows here from, the 85, 45 level. It was 84.50. And this is happening while the euro is making new lows. It's going to be interesting. I don't think that EG is going to make new lows, even if we take out another 50 pips in euro. And to me, that would be another reason for making the euro the preferred long, because EG, after having a breakdown under a falling wedge, cleaning out all the sell stops for people that were long from April, finally got them, took out this wedge line, and then once we started closing above it, negated the throw over. And then you could see that there was a nice retest, didn't quite get to the throw over line here, but pretty good retest right there. Close enough for government work. Maybe we get another one here. But this to me gives me a bias of my preferred long being the euro on a pullback. Cable also acting well because euro's making new lows, while if you look at cable here, we're holding these lows. Okay, so euro taking out those lows from here, cable holding the lows from here. So anyway, looks to me like it's going to be the preferred long. Also, another good forecast down here yesterday, I was talking about with the dollar recovering and heading up to take out the double top at that 93.19 level, that we would get a nice bounce in the yen back up towards 110. We're not quite there, but the call was made down here in the 20s. So you know, if you bought it, nothing wrong with taking partial profits. It's just money management. You get paid and you trail your stop to break even. And 110 is going to be a formidable area right here, about 110.05 for some possible shorts. I'm thinking that when the euro is bottoming, that perhaps we're going to get this top in US dollar yen for one more sell off down under the 108 handle. Looking at Canada, really hasn't done anything wrong yet. In fact, you could look at this and almost call it a nice little bull flag, continuation formation. Also with my RSI work, you had a confirmed high here, so markets rarely peak on a confirmed high. So I'd be looking for another high up here in Canada and for a potential shorting opportunity with that happening. So I still think I'm going to have a chance to buy this Canadian around 123. And we could have something like this from a little bit higher here. And if we have equality, you know, this was about 3.5 points. So if we went to 26.50, 60, equality would take us back down to the 123.12 level. We had the central bank action in Kiwi. They did not raise rates, or the market was looking for them to do it, but they're on lockdown with a few cases of COVID. Aussie's still on lockdown, still not doing anything right. There's your daily. Let's see if we're getting some divergence. A little bit, but this reading shows too much downside momentum on the 4-hour TF. Starting to diverge a little bit on the 2-hour. I'm going to see what happens around the big round number around 72 in the coming days. I'll want to look at most currencies once Dixie is up around 93.50. I'm thinking that the dollar can then correct back to the downside to 91.5. So there are going to be a lot of longs potentially after we head up another 30, 40 pips in the Dixie. Gold's really banging its head against a breakdown. Remember, we had this triangle, this rectangle a week ago that we broke down out of, and it really did hit objectives right here. And then we had this flash crash Sunday night in Asia. So it's right back to major resistance. It could stall here. I'd be looking to buy gold for another push up on, but I think we're going to head back towards this 1740 level. And as I've been pointing out for weeks, even months now, the relative weakness in silver. Silver could probe the lows and make new lows, and gold may not. So look at the difference between the angles of ascent on both of these markets, and you could tell gold is outperforming. And if you don't believe me, you just have to look at the XAU, XAG, the gold Silver ratio still trending up, which favors the long side of gold when you're bullish, the metals, and the short side of silver when you're bearish metals. Looking at the S&Ps, I think it was interesting that yesterday we took out the Afghan Kabul low that we sold off from and then recovered and made a new high that diverged and trying to dig in its heels at 44.20. Could we eke out another high in the S&Ps? It's possible, but starting to look pretty vulnerable. And same situation, NASDAQ a little stronger, but remember what Dr. Copper is saying. And we start closing under this support line at 14.913. We could fall. There's quite a lot of room between that 14.9 and then an important level is going to come in at 14.4 because that would end the throwover action that we have here. This line off the top that we had in February and the top that we had in April, and then we started accelerating through this wedge line. So we've had a couple of months trading above it. If we get back down under 14.4, then the wedge becomes activated again and could even morph into a megaphone formation. And if you look at the megaphone, there's some interesting confluence between the megaphone on the weekly and some moving averages. So you have your 200 week and this speed line, megaphone line intersecting right around the 9,400 level. 9,700 is the pre-COVID crash high. So we'll see. It's a little early to be talking about it, but I always look for what the potential could be. The VIX held this gap from the other day. I talked about this gap higher opening that we had, and when it pulled back, it did not fill it. VIX had another good day yesterday and then pulled back when he closes back over this 19 level. A lot of this is, I still think you want to be accumulating and not shorting volatility. We have yields with the N up, trying to make another move. Maybe we could head up towards this 148. What tempers my right up here? What tempers my bullishness in yields is that if I'm correct about more than a 10%, 5-10% correction in risk and equities, it's hard for me to make a case for much higher rates in that type of risk off environment. So maybe we head up to 148 and then we head lower after that. So that's my take on yields. And if the yen is going to fail up between 110 and 120 and starts heading down again, that should also pressure yields lower. Okay. I want to talk about what's happening here in some of the gold shares. Here's your GDX. Really not getting any lift compared to what the gold did after that big break. Still looking ugly. And actually, I think that we're going to head under 28 in the GDX in the coming days and weeks. Let's see where I had this wedge line where this, okay, here you go. So down here, I think the miners are going to be a buy once we, head down towards these levels. It's probably going to be something like, the October time frame. But I think you have to wait for this 28 to 27 level to look at the miners. I'm sure it'd be some type of fib retrace after the big rally that we had post-COVID. Same situation with Newmont, really never got a bounce. Maybe we're heading towards 46 for a good buy in Newmont as well. Just a quick look at commodities because they're also in corrective phases. Here's your bean market. I think that we could end up, this looks kind of bearish to me. And if we break down here, then maybe we'll see $12 beans. And long-term buys would be in order in my view there. The wheat has been the relative strength, actually a little double top. This low may be it for the wheat market. Corn could still work lower with the beans. So the wheat is your relative strength here. I've also been talking about how long it's been since the Russell made a new high. We're just barely holding the 200-day moving average here in the Russell, another failed rally attempt, and we could be on the verge of a breakdown there. Okay, anything else I really want to cover? So Apple had a little mini reversal day yesterday. You could tell, look at the glaring divergence between this high and this high. We had readings near 80, and on this recent high, we could not even get above 70. The 140 level is going to be critical. A lot of moving averages there, the 50-day, plus this wedge line coming in here. So you have some pretty good divergences happening here. It's still possible that Apple could mount some type of rally, but I think it's very long in the tooth, along with what's happening in Microsoft as well. Amazon really can't get out of its own way right now. So Apple is the largest, has the largest market cap of any stock on the board. And where Apple goes, so goes the market. So you have this 140 support and also a wedge line coming in here. So Apple is really the important stock to me for the narrative of a correction. And you'll know that it'll start doing something wrong if first we could start closing back under this double top. And eliticians would say that this is something like a triangle here as well. And triangles are normally wave fours, which is, kind of what you have here, and it's trying to hold this breakout of the triangle in Apple. So first of all, back under 150, it's not going to look so great, but wave fours are followed by one more thrust out of the triangle, which we're getting now. So if we start closing back under these double tops, I think you could go with it. And moves out of a wave four triangle normally end up being terminal. So really watching Apple because I think besides Dr. Copper giving a signal that Isaac Newton learned about gravity when an apple fell from the tree. So we're going to see if Apple falls from the tree of the bull market in equities in the coming days and weeks. I invite everyone to join us at www.tradegatehub.com. Bring your charts and bring your questions. Participate with us, have a mastermind with us. I know that this is being broadcast on FX Street, and perhaps you recall the live analysis room that I hosted 4 or 5 years ago, where we had interaction during the webinar, and we can do the same thing here. You just bring your charts and we interact, and I could take a look at it. And if you have some questions, I could also provide my views and what I would do and teach my methods if you're interested in learning. And when it comes to learning, here's your options. Either pay to learn for education or pay the market, and hope that it's not an Ivy League tuition, but a community college tuition. So that's a wrap. Tune in tomorrow. I have an excellent interview lined up with Peter Campbell. Peter has seen a lot of the topping signals happening in the market. He's going to build his case for a very significant top in the S&Ps. I've interviewed Peter quite a few times. You will not be disappointed. He's an excellent elite technician, and look forward to sharing his views with everyone tomorrow live here on YouTube and in TradeGate Hub. My mission and our mission is to build up and edify traders every day. And remember, just don't count your apples or your coins or your crypto. Count your blessings, and we'll see everyone tomorrow.